We've got the rand sliding back against the dollar, continuing with that downward momentum this morning. And of course, all that as a result of the disappointing data that came through from the US in the form of non-farm payrolls and contributing to a risk-off scenario in a very big way.
Good morning, Alishia. Absolutely. We saw those global growth fears being reignited by those disappointing payrolls figures on Friday. No jobs really created, and it just bodes very ill for the future outlook for the US economy. Obviously, if people don't have jobs, they certainly aren't going to be going out and spending, and that means that demand could remain weak for a number of months, because remember, your employment figures are a bit of a lagging indicator for economic activity. So the fact that it's still in the doldrums bodes very ill for the world's largest economy.
Absolutely. But then you've got to ask, is a sustained rand weakness really on the cards, given that there now seems to be greater imperative for QE3 to come to the fore, and that likely to have a negative impact on the dollar?
Yeah, absolutely. I think, that's definitely, we saw the dollar weakening initially for those exact reasons. However, I'm not convinced this time around that another wave of monetary stimulus from the Fed is actually going to revive the appetite for risky assets. I think even those speculators out there that have been chasing the high commodity prices, that have been chasing the high yielding currencies, are now a little bit reticent, because they know that the underlying demand is just not there, and they could very well be heading towards creating just an asset bubble, which will probably burst at some stage. So I think the speculators have probably made a lot of money already in these trades, and I don't think more quantitative easing is really going to inspire them much. I think everyone now needs to see some improvement on the global growth outlook, and really we're still scratching our heads as to what is going to bring that about. There's obviously a lot of speakers taking the podium this week. We have the Fed Chairman Bernanke, we have President Obama, we have the ECB meetings as well. All of these speeches will be closely monitored to see whether or not any of these authorities can actually come up with some kind of a silver bullet. But I just don't think they really have much left in the tank, so to speak. And we're still faced with the same underlying problem, and that is the Western countries need to deleverage, and for that to happen, demand is going to be soft for the foreseeable future. So I'm afraid still very much a grizzly bear.
Okay, let's take a look then at the kind of bear we're facing over on the Eurozone side, because you touched on the fact that we're anticipating decisions out of the ECB and BOE later this week, and this in a context where we've had Greece not meeting its targets for austerity.
Well, exactly, Alishia, and that just adds more pressure to this whole austerity sphere, because if Greece doesn't get more money from the IMF, ECB and the EU, then they could very well be facing an all-out default. Of course, that would spook markets, bring about broad-based risk aversion as well. So I'm afraid this debt situation isn't improving either, and it's just kind of a non-starter. We're just not getting out of it. So it's going to be very interesting to see whether or not we see any change in tune from the ECB this week. I think we probably will. They've been very hawkish, but I think they're going to have to start stepping up to the plate now, and also adopting more of a dovish tone. Try and get more money out to consumers, to businesses, because at the end of the day, we need to create jobs and we need to stimulate demand. And the fact that the payrolls figures on Friday were so disappointing just shows us that clearly that's not happening as yet.
What about the kind of tune that you're anticipating out of the Bank of Japan, Michael? Because it's expected to refrain from easing monetary policy this week.
Yeah, a difficult one out of Japan as well. Obviously, it's a race to the bottom for currencies. We saw Brazil coming out this weekend and complaining again about the weak dollar environment, how it's hurting its export sector. Same applies to Japan, same applies to Switzerland. Everyone wants a competitive exchange rate in the current environment where demand is just so weak. So again, it's going to be very difficult for Japan to do much. They've come out during certain periods and tried to intervene in the currency market. market. But again, as we've said repeatedly on the show, that's really a temporary measure. It's not going to be sustained, and it's going to be very interesting to see from this week's domestic reserves figures whether or not the SARB also stepped up to the plate and accumulated more reserves in order to try and kind of push the bearish rand momentum that we've seen, because we also need a very competitive exchange rate in the current environment. Not only is global demand weak, but we've also had all the strike activity, so domestic output is really suffering.